Good day, learners, and welcome to Homeschooling Adventures. My name is P. Rauni, and in today's video, we are going to be looking at the past exam questions involving balance of payment. So it's a follow-up video on the lecture that we had in the previous video on balance of payment. So if you haven't watched the video on the lessons where we were teaching the concepts on balance of payment, I will encourage you to go through that video so that you can then get an understanding of some of the things that are important as you prepare for your exams. Now, in this particular video, we are going to be looking at some past exam question papers, like I had said, and then that's when we are going to be looking at how we make those entries, or how those things are going to be calculated, individual elements of our balance of payment accounts. Now, you would recall that when we looked at the balance of payment, we generally identified that it is made up of three main accounts. We identified that it's made up of the current account, it's made up of the financial account, and it's made up of the capital transfer account. Now, these accounts that make up the balance of payment, we can generally say they can be abbreviated by the word. The easiest way, we said our balance of payment is made up of the current account. I'm just going to say our CA there. Okay, it's made up of our current account. It's also made up of the financial account. Okay, and then it's also made up of the capital transfer account. Okay, so these are the three accounts that make up our balance of payment. Okay, but if you can check on the screen, I have just posted, and I'm going to be sharing with you a number of questions, and then I'll ask you to attempt the questions before we can then go through the question paper, the questions with together with you, as you will be marking your own work. So if you go through this question, you'll find that it's a question that I just got from our SIP material, and it's a question that was taken from one of the past exam papers. So I'm sure we are going to be able to make use of that question. The question reads, it's study the table below and answer the questions that follow. So the question, these are typical kind of questions that you can get in your section B, where learners are expected to be choosing either between question 2 in your final exams, in your NSC exams in November, or in the prelims or preparatory exams. In your section B, remember, you are given 3 questions, and a learner is expected to answer 2 out of those 3 questions that are given. So this could be one of the questions that you are given, and possibly because it's coming under macroeconomics, it's a question that a learner, if it is to be assessed by the examiners, a learner should expect to get this kind of questions on their question 2, or you should expect to get this kind of question on the question 4, which is our hybrid question, which is going to be mixing macroeconomics as well as our economic pursuits in the paper 1. Now, it says study the table below and answer the questions that fall. Now, you can see that it's a balance of payment, and these are annual figures that are given. And then we are told this particular section, it's not the complete balance of payment, but according to this, it shows that this is a current account. This is a current account, according to to what has been indicated there. So it means all these entries that we are seeing here, these are entries that are supposed to be appearing in our current account in the balance of payment, as was discussed in the previous video. Now, what we find there is we are given 3 different years. We are told one year is X, the other one is Y, and the other one is Z. Okay, and then we are told there's merchandise exports, there's net gold exports, there's service receipts, there's income receipts, and those are the ones, merchandise imports. Then we are told that there's a balance on a current account, and then there's a memo item, trading balance. Okay, So that's our table that we have in summary, the annual figures that we are given. Then if you go to the next question, we are told, remember, when you look at our current account, before I go to the actual questions, when you look at our current account, learners, you need to remember that this is the account that records receipts on merchandise exports, as well as payments on merchandise imports, as well as the receipts from gold exports. Those are the things that are recorded primarily in our current account. And I think in the previous video we did explain why we record gold under current account when gold is a product, and we said it is because of the significance that it has and its importance on the international monetary system. Remember, we said gold can be used as a medium of exchange on the international monetary system, so that's why we were recording it under our current account. And also the second reason that we identified, we said, remember, gold, because of its relative importance in South Africa, it would mean that it is a key commodity that the country has been selling to try and raise foreign currency. So it would now mean that gold, because of that, it will be appearing under our current account. Okay, but those are some of the reasons why gold is appearing under our current account when it's actually a product. Okay, and now in this part of the video, I'm just going to ask you to pause the video a little bit, and I'll give you about 8 minutes to go through that activity where you are going to be answering the question 4.1 right up to 4.5, and I'll be back with you in about 8 minutes time, and then we'll take it up from there. So you can just pause the video, and then you can do this on your own, and then we'll come back and then mark the work and make some corrections where we probably did not get it right. Okay, all the best. So your 8 minutes starts now. Okay, welcome back, and I want to believe that you managed to go through the question without any problems. Now, if you had any difficulties, don't worry, we are going to go through the activities together, and you are going to be marking your own work, and where you didn't understand, you will probably explain it. But if we still did not address what you don't understand, you are free to add a comment and just drop a question on the comment box below, and then we'll surely go through the comments, and we'll try to address those questions that you probably have. Now, question 4.1, it reads, name any one account that forms part of the balance of payment. But before we go through that, I just want to refresh our memories on what we said when we spoke about exports. Now remember, when we said exports, we said we are generally looking at those goods that are manufactured in our country and are going to be consumed by the rest of the world. Those are exports. Goods that are manufactured in our country and that are going to be used by the rest of the world. Those are our exports. And then we also said, when we look at imports, we said those are goods that are manufactured by the rest of the world and are going to be consumed in our country. Goods that are manufactured by the rest of the world and are going to be consumed in our country. Those are our imports. Okay, now it would generally mean that when we talk about exports, we are going to be receiving some amount of money for the exports. In other words, when we export goods, we are going to receive some money. Okay, that's a receipt. And then when we import goods, we are going to make a payment, and that's a payment. So in our previous video, remember, we also said these payments, they are going to be subtracted in our current account, and the receipts are going to be added in our current account. Okay, so let's go through the activity together. Now the question reads, name any one other account that forms part of the balance of payment. Now when we're looking at our previous question, we have already identified the accounts. We said there are 3 accounts that make up our balance of payment. We have the current account, which I said the CA here, and then we also identified the financial account, which I indicated as F there, and then we also said the other one is the capital transfer account. So it means Elena could have just written capital transfer. If you have written capital transfer, if you have written capital transfer, okay, or you have written financial account. Okay, if you have written capital transfer or financial account, you are going to get your 1 mark there. The any one of those, because it was saying name any one. So if you had just given us either capital transfer or a financial account, then we are going to what? We're going to get that 1 mark there. Then the next question says, identify an account that captures the effect of foreigner purchasing shares on the JSE Securities Exchange. Now, when the question says identify, okay, when our question here says identify, it means this, you just have to identify the account. There should be an account, that means from our balance of payment, that captures the foreigners who invest in our country and who are investing not with the intention of taking over the business or gaining control over the business, but with the intention of getting profits or dividends. Okay, now remember, in the previous video we have identified 2 types of investors that we have. Okay, we identified there are 3 of them, but I explained in principle, in detail, I explained 2 of them, and I said we have one who are called the direct investors, and we say the direct investors are those investors that are going to invest in our country with the intention of gaining control over businesses. Okay, and then if those people are investing with the intention of gaining control over how the business is run or how the business operates, then we are saying that's an example of a direct investment, okay, which we said an FDI, for example. And then we also have the second category that we looked at. We said we have what are called portfolio investors, and we said portfolio investors, these are investors that bring their investment into the country with the intention of getting dividends from their investment. And in this particular case, we gave an example of people that invest on shares from the Johannesburg Securities Exchange, our JSE. Now, this question that we have here says, identify an account that captures the effect of a foreigner purchasing shares on the JSE Securities Exchange. So the account that you were supposed to identify there was supposed to be our portfolio investment. Okay, it's a portfolio investment. That's the correct answer there. Portfolio. Okay, our portfolio investment, okay, is the correct one there. Okay, right, so our portfolio investment is the correct one. Okay, then if you have written portfolio investment, then you are going to get your 1 mark there. Then the next question, it says, briefly describe the term balance of payment. Now, when we talk about balance of payment, dear learners, you do recall that it is a record of all transactions that have taken place in one country or between one country and the rest of the world. Okay, it is a record of all transactions that have taken place between one country and the rest of the world, and normally this is a record over a period of 1 year. Okay, so it is a record of all the transactions that have taken place in one country. In our context, in the context of South Africa, then it's the record of transactions that have taken place in between South Africa and the rest of the world over a period of 1 year. So that's what we said is our balance of payment. So if you said is a record of all transactions between one country and the rest of the world, okay, and these transactions are relating to merchandise and merchandise goods or services, and then also involving even money that is across international borders, monies that leave our country to the other countries, okay, as well as monies that are leaving those other countries into our country. So that systematic way of recording those transactions is what we call our balance of payment. Okay, then we go to the next transaction. So if you have done that, then you get your 2 marks there. Then we go to the next question. It says, why is gold exports listed as a separate item in the balance of payment? Now, remember when I was explaining on our current account, we said our current account is going to record merchandise exports as well as gold exports, and then also merchandise imports. Okay, now remember when we talk about, when I spoke about gold, I gave you the reason, and then I said the reason why we record gold in our current account, though it is a product, is because gold has a significant importance to us as a country, because of its ability to generate foreign currency for us. Okay, as a country, as South Africa, a country, we are rich in terms of gold deposits. Okay, we are amongst the top countries when it comes to the quantity of gold that is in the country, in the economy. Okay, so in this case now, because of that, it means gold has a greater potential to help the country to generate foreign currency. Okay, so gold, that's why it's being recorded under our current account, because of its relative importance. And then you would also need to understand that the reason why we also record gold in our current account, I said it is because of the way the International Monetary System works. It recognizes gold also as some form of money. It can be used in buying goods or paying for services. Okay, so we are saying gold is has those significant importance to us. That's why we record it under the current account. But here this question is asking us, why is gold listed as a separate item in the BoP? Now, the reason why it is listed as a separate item in the BoP is because it is a key export commodity, and it also helps us in earning foreign currency as a country. So if you have managed to say that, then you are going to be getting your 2 marks there. Okay, then the next question that we are going to look at is the question number 4.5. It says, calculate the trade balance on the current account for 2006. Okay, but if you go to your table there is no year that is 2006, so I'm just going to change this 2006. I'm just going to change it, and then I'm going to say year Z. Okay, I'm going to change that 2006 to year Z. Okay, now if we are changing it to year Z, then it would now mean that the question would read, calculate the trade balance on the current account for year Z. Okay, now in this case, remember when we are calculating our trade balance, when we are calculating our trade balance, okay, or our balance of trade, it would mean that we are going to be looking at exports, okay, minus our imports. But these exports, remember, I would love to call them visible exports, okay, minus our visible imports. Now, when we say visible exports, learners, we are saying these are exports of goods or merchandise, okay, as well as gold. Okay, those are visible exports. And then when you say visible imports, it's the import of merchandise goods. Okay, now if we import a service is an intangible thing. It's an intangible item. It does not command space. Okay, so as such, we don't include it when we are calculating our trade balance, because it's not something that we got from trade. Okay, it's not from trade. Okay, so in this case, when we talk about visible exports, I'm just going to be looking at our merchandise goods as well as gold, okay, minus visible imports. So according to this question now, it would now mean that we have merchandise there, so we are going to have this amount here, we are going to have this amount here, okay. Then we also have gold, it's also going to be the other amount that we have there, okay. Okay, these are the visible. Then we said services are not, okay, so we don't include the services. And then we go to merchandise imports, those are goods that we have imported, so it means they should also form part of our trade balance or balance of trade, okay. And then we have payments for services, it doesn't form part of that. Then we have income payments, no, it doesn't form part of that. Capital transfers, no, it doesn't form part of that. So what we are going to do now is we are going to add here these two, because these are the visible exports. We add the two. So when you add 399030, you are going to add it with 3547, and then you are going to subtract these imports, merchandise imports. So it means when we import goods, we are going to pay for them, so it's an outflow, so we are going to subtract this. Okay, so if you do that, then it would mean, let me just try to bring my calculator here. Okay, if you go to your calculator, if you say 399030 plus a 35470, okay, minus, okay, your 476545, if you say equals, you are going to get your answer as, your answer becomes 4. Okay, let me just try to write this all over again so that you can see it clearly. Okay, I'm just going to write it in blue. Okay, so we are going to say 399030. We are adding 3 5 for gold. We are adding the 354770. Okay, and then we are going to subtract from that answer that we are going to get, we are going to subtract our 4 7 6 5 4 and then our 5. Okay, so if you then do this, then your answer is going to be, your answer there is going to be a 4 2 0 4 5. Okay, so it means this one is our trade balance. But now, because this is, the outflows are more than our inflows, so it means this one is going to be a negative, okay, which shows that we have paid out more than the receipts that we have received. Okay, so this is how you were supposed to solve that problem of that question there. Okay, these were the answers to that question. So let's just move to the next question, and let's see what we have now. Now if we go to the next question, you will find that we are told study the graph below and answer the questions that follow, and then we are told those questions. Now if you look at it, this one is a balance of payment and percentage of gross domestic product, okay, in terms of percentages of our gross domestic product. And if you look on one side, if you look on this side here, you are going to see that, you are going to notice that this side here, these are percentages, okay, and then if you look at this side here, these are the years, okay, this side here, these are the years, okay. So we are told these percentages, this one is 0, which means all these other values here, they show a negative, okay, they show a negative, which means our balance of payment was on a deficit. That's what it means. It means what we were paying out on for imports is more than the amount of monies that we were receiving from our exports, okay. So that's what it means. So in this case now, I will just pause the video a little bit and I will ask you to go through this activity and see if you will be able to answer that, okay. So I will be joining you again after about 10 minutes from now, okay. All the best. Okay, welcome back. I want to believe that you managed to answer that activity. Now if you didn't, then we are going to go through it and you will get an opportunity to understand how things were supposed to be done. And if you have any questions, then you can always post a comment on the comment boxes below, then we will be able to respond to those questions. Now the question that we have here is study the graph below and answer the questions that follow. And then it's name one item that appears in the financial account of the balance of payments. Now you remember that, you'd recall that when we spoke about the balance of payment, we said the financial account is made up of direct investments, it's also made up of portfolio investments, it's also made up of what we call the other investments, okay, and then it is also made up of what we call reserve assets. Now Elena could have given us any one of those. If you identified any one of those, then you are going to mark your work correct. So we said it's a financial account is made up of direct investments, it's also made up of the portfolio investments, it's also made up of the net financial derivatives, it's also made up of the other investments, and then it also has what is called the reserve assets. So if you identified any one of them, then you can mark your work correct. Okay, then the next question was briefly describe the term trade balance. Okay, briefly describe the term trade balance. Now when we talk about trade balance, we are saying it's the difference between merchandise exports and merchandise imports. So it's the difference between our merchandise exports or visible exports and visible imports. In other words, the goods and which is our merchandise, okay. So it's the balance of payment is the difference between visible exports and visible imports, or we are saying merchandise exports and merchandise imports. That's the correct term. And then the next question that we have there is describe in the general trend of the balance of on the current account between 2006. So in other words, we are looking at 2006. This is 2006 there. That's our 2006. Between 2006 and 2011 and here, okay. So we are required to describe the general trend, to describe, okay. The question here says describe, okay. So when the question says describe, we expect that learners in their discussions, they should include some facts, or they should include some figures possibly. In this context, we would definitely expect some figures. In other words, if you are talking about the GDP, then you are going to be telling us what are the percentages and what has been happening to the GDP, to the value of the GDP over the years, okay. And remember, these percentages that we have this side, these are percentages of GDP. These are percentages of our GDP. Okay, now in this case now, it would now generally indicate that there's been a deficit, there's been a decline between over the years. Okay, there's been a decline over the years. Okay, so what learners could have done here was learners could have explained what is generally happening. But you will find that every year there is a deficit. Why are we saying there's a deficit? Because you will find that these bars are on the negative side. They are on the negative side, indicating that there is a deficit or there is a decrease in or there is a in the national income. Why is there a decrease? There's a decrease because we are saying our exports are less than our imports. In other words, our payments, they were more than our receipts, okay, from the trade as a country. So in this case now, what it means now is we are saying every year there's going to be a deficit. We are describing. You'll find that 2006 there was a deficit, 2007 it's still on the negative, 2008, 2009, 2010 and 2011. Over all these years there's been a deficit. Okay, and then you would now give us now the intricate details. In other words, when you now say there's been a deficit, then which years were worse off and which years were better. Okay, now in this case you can then now say we have years like this year here, okay, 2007. Okay, we have years like 2007, and then we also have other years like even this 2008. Between 2007 and 2008, I think that's where we had our largest BoP deficit. Okay, so where are we getting the information from? We are looking at the bars. Okay, and it seems this was where it was around 8%, negative 8%. It was on a negative 8%. So you are saying between year 2007 and 2008 they were the worst years with a negative 8%. Okay, and then you would also find that there are other years that that showed some big improvement. Like if you check on this year here, I think this one here, this year that is here, it's probably somewhere between 2010 and 2011. Okay, so now you can now indicate between 2010 and 2011 it was at its lowest, though it was still in the negative, but it was at its lowest. I think somewhere around there on this one, I think it shows something like 2%. It was around 2%, negative 2%. So that was when it was at its lowest. Okay, so now this is how you describe. So what do? You are going to tell us that generally the economy has been on a deficit. Okay, in other words, the balance of payment, has been on a deficit. Okay, because all of them, they are on the negative side. Okay, then when you have done that, you now give us the intricate details. You are now telling us, if you say it was on the deficit, then by how much? You now give us the facts. And in this case now, we are saying, we are highlighting just the highest figures, the highest values, and we are also talking about the lowest values. That's what we are using when we are describing. Okay, so our highest values are the figures of minus 8%. That was suffered in 2007, between 2007 and 2008, and then we also had our lowest deficit that we also had in between 2010 and 2011. Okay, so that's what you are going to be telling us, and then you are also giving us the percentages. Like in between 2010 and 2011, the figure was a negative 2%. Okay, so that's how you answer this question. And then the next question 5.4, it says describe suggest two methods to improve the balance of payment account. Now, when we are trying to improve the balance of payment account, there are a number of measures that governments can put in place to try and improve on the balance of payment. One of the measures that they can put in place is to try and address the issues of exports. In other words, if we have more exports, then it would mean that we are going to have more receipts from the sale of merchandise. Is that correct? So what government can do to try and address or correct the balance of payment, the current account, it would mean that the government can actually come up with any measure that is intended at increasing or promoting exports. And the measures that can be used to promote exports is the weakening of the rand. We now know that when the rand is weaker, when the rand is weak or depreciates in value, it makes our exports cheap. Okay, so in this case, it would now mean that for other businesses or other countries that are outside South Africa, the rest of the world, they are going to find it cheaper to buy goods from us. Okay, because we now have a weaker currency against theirs, so it would now mean that they will find it cheaper to buy goods from us. And if they can buy goods from us, then it means the value of our exports is going to go up. Okay, so it would now mean that we can weaken the currency. Okay, we weaken the rand. In other words, a weaker rand is going to help us, okay, in correcting the current account. And then with the second thing that with on weakening of rands, what it will also do is it will discourage people who are in South Africa from bringing goods from the rest of the world. Now, what that would mean is if you have a South African rand and you want to bring goods from the United States, for example, it would now mean that you now need more South African rands for you to be able to buy the goods from United States. And in that case, it will become more expensive for businesses that are in South Africa to import goods from other countries. And it means now our imports, they are going to go down. And this is all achieved because we have weakened our currency. Okay, so if we have a weaker currency, what it does is it encourages exports and it discourages imports. So what it will do now is we will have corrected. In other words, the amount of monies that we are going to use on paying out is going to be less than the amount of monies that we have received when we exported the goods. Okay, so that's the first thing that you could have done. So if you have identified that a weaker rand or depreciation of the rand, then you can get your 2 marks there. Okay, the second way that they can do that is they can do that through borrowing, or if they borrow some amount of money from IMF, then it would mean that that's another way that they can actually use to correct the balance of payment, to try and finance the deficit, the budget, the balance of payment deficit. And countries like South Africa can actually borrow from the IMF because it's a member state. Okay, and then we also have the other thing that they can do is we identify the export promotion. In other words, any other measure that can be put in place by government to try and encourage the export of South African manufactured goods to the rest of the world. Like in later chapters, we are going to be looking at some of the measures, like the special economic zones, which are designed by government to try and produce goods that are destined for the rest of the world. In other words, for the foreign sector, the goods that are going to be sold in other countries. Then it would now mean that if the government comes up with those measures that promote exports of goods to the rest of the world, then it would mean that that will also help in correcting our current account. Okay, but the SEZs, we are going to be looking at them in the coming chapters, and then also the coming videos. And then you would also find that the other thing that the government can also do is to try and control on imports. There are some restrictions that government can put in place to try and protect local industries. Now, Now, if they come up with things like an embargo on certain products, like this is when the government stops or bans, it's a total ban on the use or the import of a certain product in a country. Now, if the government does that, then it means they would have protected the local industries, and in so doing, they are actually discouraging people from buying products from outside the country, but rather look at products that we have local. So it means import controls is one of them. They can also even look under import controls. They can also even look at things like import duty, or even it could be a tariff, or a specific, or an ad valorem. So those things, they can actually be put in place by the government to try and control on import of goods into the country. Okay, so those are some of the measures that can be put in place. So what is this question only required you to give us any two methods that the government could use, any two methods that the government could use to try and improve the balance of payment on our current account. So if you had identified any two, we said one of them, they could weaken the rand or depreciate the rand. If you say that, then you get your 2 marks. Or the other measure that they can do is they can even borrow from IMF, because South Africa, we now know, is a member state, so they can also go to IMF and borrow some amount of money from IMF to try and finance their BoP. Okay, and then they can also even do export promotion. They can also use export promotion as a way of trying to correct the balance of payment. They can also even look at things like import controls. Okay, so these are some of the measures. They are not all, but they are some of the measures that can be put in place by the South African government to try and correct on the balance of payment. So this was the answers to the activity that we were looking at, and I will just encourage you that you need to go through this topic and try to refresh your memories on those things that we have covered in this particular section of the syllabus. Okay, now in the coming videos we are going to be looking at the foreign exchange markets, and we'll also be looking at even how the depreciation of a currency is illustrated in a graph, and also how appreciation of a currency is illustrated in a graph, and how it affects the exchange or the export of goods as well as the import of goods. Okay, so if you like the video, remember to click the like button, and also we'll also encourage you to click the subscribe button, so that you can also even get the next videos. You don't miss on the next allocations that we are going to be doing. Now, good luck in your studies and all the best. Thank you.